Hi, so in this video, I want to talk about one of the most common price action mistakes that a lot of traders are making, which limits their profits. So before I get into the price action, the trading video, I want to take a minute and discuss the post-market analysis of Bank Nifty on the levels that we have given in our WhatsApp group. If you are not in our WhatsApp group, you can DM us on Instagram and we'll add you to our stock market community on WhatsApp. So, we gave a level of 17,130 on our WhatsApp group. That was a very important support, and we mentioned that if price goes below this level, it is going to fall a lot further. But price sustained this level, so this was a very good buying point at all these three dips. So you could have started your buying here. Another important level was around the 17,350 zones. That was a very strong level. We were not able to go past this level at all during the day. And finally, the last level that we discussed in the group was this level, the level of 17,220 to 30. That was acting as a very strong support throughout the first half of the session. And when it broke down, that was the first move, the swing that we made advantage of. Then we again started buying at this place, though I had a selling point of view when I was looking at the pattern, but I changed it and started buying with a target one of this point and a target two of around the 17,350 zones. So that was how the entire price action trade of Bank Nifty was scheduled for today. Talking about the stochastic strategy that I'm asking all of you to use in this current market condition, let's test it on how it is working. So we got a sell signal on stochastic, right over here. Works perfectly at this point. Another sell right over here, and it worked perfectly at this point, gave two sell signals. So combine this stochastic with your 200 DMA to get the perfect signals, and it's been consistent. We haven't hit any stop loss with the 200 DMA and stochastic strategy yet. So that was about the post market analysis, the levels that we gave in the group, how to interpret that, and how we interpreted and moved in the direction of swing and made the profit. So now let's come back to the main issue in the video regarding the price action mistakes that we all are making right now. So I want to discuss this concept before I start talking about it. So we all know this concept that price moves between the support and resistance, right? So price bounces back from resistance, support. It keeps on moving. It moves in a parallel channel formation, and what the traders like is either a breakdown or a breakout. So whenever the breakout happens, all the price action traders, they essentially wait for it to retest, and they start buying at this position and aim for the profit of the high that was made earlier. So this concept is simple, right? You already know about this. Resistance turns support, support after the breakdown turns resistance. So price action traders wait for this particular level to be achieved after a breakout, and they start buying at this point only. So a lot of times this doesn't happen. 80% times or maybe 85% times prices do come back after a breakout or a breakdown to retest your level as support resistance, and that is a wonderful entry point. You can combine with your candles and you can come in scalp all the way. You can always do that. But what if this doesn't happen? What I mean by that is, let us say this is the resistance and price is bouncing back, testing the resistance, and when it breaks out, it only pulls back a little bit and then goes back up. So what do you do in such cases? So if you're used to this strategy, the basic criteria, you won't be able to trade in such scenario, and this is actually limiting your loss, because this breakout that you identified was really strong, but because it could not test your level, you missed the entire profit. So I want to discuss what I am doing currently to trade these breakouts even though it doesn't test. So what I do is simple. I wait for the breakout to happen. So let's say the breakout happened right here. And if it didn't test, so let's say just, it will always pull back, maybe not entirely, it will always pull back a little bit. So when it pulls back, I try to form a continuation pattern. It can be a flag, it can be a pennant, maybe an ascending triangle, symmetrical triangle, whatever you are using. I try to form a continuation, pattern in this area, and I wait for that continuation pattern to be broken, and that is when I enter. So What I'm trying to say is price is consolidating. When it breaks out, I maybe wait for a flag formation and I wait for entry right over here and then take my profits. So I want to discuss with some examples. This might not sound very easy, but it actually is very easy. So talking about the Nifty charts, this happened just a couple of days back. This was a very important, resistance for Nifty, and a lot of traders were on this on the fifth on this the 5 minute candlestick on the 20th May. They were tracking this level, right? So when the breakout happened, all of us were waiting for the level back to be tested so that you can enter here right at this point. But this actually didn't happen. So what do you do in such a case? That's the problem what we are facing. So what I do is I like to wait for my continuation patterns when the price breaks out. It was followed by heavy volume, so I'm confirmed of the breakout, but I don't want to jump in immediately. I'll wait for a pattern to be formed. So as you can see, the first pattern that was formed was a pennant, or you can say a flag. This was the flag pole. This was the pennant. So I'll be entering around this area, around 9013 levels. I'll be entering and going high. So in this way, I'm able to take benefit of the movement. I know that the price is consolidating, it'll move further. It's a continuation of trend. So this way, I don't have to wait for the retest and I can take a movement, but obviously I do miss some kind of profit. But always, it's better to take a confirmed trade rather than just jumping in the price. Another example would be, whenever the price moves forward again, this is another pennant formation. So you can also wait for this consolidation to end, wait for the breakout. You can enter at this price and trade that profit. So prices have not been retesting. They are just pulling back a little bit. So we are using the continuation patterns to trade these the continuation, the breakout. Another example is Ultratech Cement. This was a really good example. This is on the downside. So this was a very important support around the 15th of April, I think. Yeah, or 15th of May. Sorry. This was a very important support for Ultratech Cement. It wasn't being able to breach, and also this was forming something like a descending triangle. So all the traders were expecting a move to the downside. And what happened? Let's analyze later. When the breakdown happened, we were expecting movements, to test the exact area of support and then fall back, but that didn't happen. It only pulled back a little bit. It didn't pull back all the way. So in such a case, form your continuation patterns. So this was an example of flag. A flag pattern was formed. We wait for this kind of breakout. We can enter at this point again. If you miss this entry, wait for another continuation pattern. So this was another flag pattern that was being formed. Wait for the breakout, get the entry. This was another flag or pennant being formed, the inverted pennants, and you can again enter here and get this entry. So what I am basically trying to say is that a lot of times the retest is not going to happen. Maybe 20%, 30% time, it won't happen. So we have to adjust, improvise in those scenarios, put our continuation patterns on the charts and wait for the breakouts of those continuation patterns and enter at that time. So just to sum up what we have learned in this video, whenever your breakouts happen, if they happen to the upside, if they retest, it's perfect. Enter at the retest points, use candlesticks. If it doesn't retest, wait for a continuation pattern, for example, a channel flag to be formed, and wait for a breakout on this pattern and you can enter in this point. Talking about the downside, if there is a breakdown of support and if the retest happens, it's perfect, the ideal situation. Use your candlestick entries on the retest. But if this retracement does not happen, you form your continuation patterns. For example, you can form a flag pattern, a descending triangle, symmetrical triangle, and wait for the breakout to happen. And that is where you can enter and enjoy that breakdown that you have just forecasted. The stop loss and the targets would be the same that you use in the patterns, the flags and triangles. You already know how to put stop loss and triangles, so I won't get into that. Let me know if you have any trouble, and I'll help you out. All right, thank you.